Welcome everyone to the Kindle Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. As we look back on yesterday, it was really a lackluster day for the most part. Once again, we saw the rally early in the session, printing up just to the 10-day moving average on the cash and the futures, and then we saw pressure coming in and fading into the close. This pattern has been repeating itself for the last couple of days, and as I mentioned in yesterday's video, we're starting to see the effects of these weaker closes every day as momentum starting to bleed off fairly quickly. I'll go through all the details here in a few minutes. In the technicals, we're definitely starting to see a further shift in the markets. Just a quick mention, in yesterday's live stream, I did go through a detailed view of the long-term aspects of the markets. You might want to watch that video if you haven't already seen it. That will give you some perspective of both the very long-term as well as the intermediate-term scenarios. As I have been discussing, we're looking at deal or no deal. I still continue to say it's no deal. Overnight, we're seeing pressure on the futures. We've received news that Russia and Iran is trying to affect our elections in the United States. Well, that would be, since I've been old enough to vote, they've been doing this. There's nothing new here. The markets are taking some heat overnight. The futures are down, pushing down towards some of the extreme support levels. As we go forward, there's still a lot going on. There's 168 earnings reports coming out today. Some of them are very significant companies. They will come into focus tomorrow, as well as that number I keep focusing you in on every week is the claims, which is expected to show 875,000 increase, and the continuing claims that came in last week at 10.01 million. If this number comes in under 10 million, that will be slightly bullish. We'll see how the sentiment goes overnight as we start to digest some of this news that's out in the marketplace. The only other metrics that are coming out tomorrow is LEI, leading economic indicators. No one really cares. They're expected to come in at 0.07. Then we have existing home sales, which people do care about, expected to show 6.15 million units sold. That number will be watched fairly closely, as we still are in this housing surge across the country as a lot of folks are moving to the suburbs. I continue to believe that this narrative of the movement from the cities to the suburbs will dominate over the next 6 months, maybe as much as the next year. But as we come into Thursday, if the futures stay weak overnight and we come in toward the 3,400 level, we're going to find out if the support levels I've been talking about are real and whether they're going to hold. There is a potential here for a major shift in the markets, and I believe today will be one of the most important days that we'll see possibly in the next couple of weeks. This could set the tone as we go into the next 10 to 14 days of trading. Let's go ahead and take a look at the charts, see what they're telling us for Thursday. As I mentioned in the opening comments, we're seeing a shift in the markets, and one of the things that I cover every night is the WaveTech database. And as we go through this, we now see that we've received over 600 sell signals, only 200 buys, so we have a negative selling ratio across the board on the short-term models, and we now have dropped to a 32.9% bullish level. Over the past several weeks, I've been talking about the 42% level, and we continue to see the database inch down after the last couple of days. And if it breaks back under 26%, this would suggest that we'll see further weakness, and we're likely to see the markets move down into the next level. I'll cover these details here in a minute in the technical section. But the database is definitely setting up and looking like it wants to turn negative again. If it does that, most likely what will happen is we will see a liquidation, and the next liquidation will set up a significant low in the pattern. This is going to take several weeks to unfold. As we review the S&P futures, we'll see they're down 22 handles overnight, 0.66%. And this is actually demonstrating that weakness that I talked about in the opening comments. And we're trading down to the key support levels between 34.03 to 33.96. And this will be the key test for these markets. Now, if we look at PPM1, we see it's rolling over. We've cut through the first and second derivatives. We actually have a negative ppm1. It's not in a downtrend as of the moment. It does suggest that we will see downward pressure coming over the next several days. Now, if we can hold 3403, that will be key. Now, looking at the market grid, you'll see S2 is 3403. We've actually printed down to 3402.50 overnight. We printed basically into that support level. So if we can hold that in the first 2 hours in the morning and start to move back above 3418, and then ultimately we could trade into the R1 level, which is 3446. So looking for at least an S2 R1 number, looking for some sort of recovery after the market opens in the morning. However, if we do take out the 3403 number in a significant way, then we're going to see further downward pressure to around the 3388 level. As we look at the cash markets, in yesterday's sell-off, we did trade down toward S1. We saw a high very close to R2, 3469.64. We saw a high of 3464.86. What we're seeing here is the ppms are starting to roll over, both on ppm 1 and 2. ppm 3 is already negative, not really giving us much support at that 40 period moving average. Now, the 40 period moving average is at 3407. This level is likely to be challenged off the open today, and if we get through that level, then the next level will be the 3416, 3402 levels. And this is significant. This is the place where if this pattern is going to break down, we're going to see this surge, and we could trade all the way back into some of the key levels that are evident on the weekly chart. The weekly chart illustrates that the 10-week moving average is 3403.60. The next level below that is 3291. And I've been talking about this ABC pattern that is unfolding. It looks like we could see an acceleration if we get through these numbers. If we hold it today, then we're likely to see a 2-day rally and then a resumption of the downtrend. But it looks like we're very vulnerable here to a rollover going down toward the 21-week moving average at 3291. The target range 3342 to 3291. That will be your targets for the downside if we get through here today. This pattern suggests we're at a critical juncture in the markets. As I mentioned in the opening comments, if we break these levels and close lower, then we're going to see the next several weeks of the markets trading down toward these numbers I just mentioned. Next market I'll cover is the NASDAQ. NASDAQ is also printing lower. We're down 0.57. We're trading well below the 10-period moving average. What's coming into play here is the 21-day moving average and the 40-day moving average at 11,567 and 11,513. Looking at the grid here, you'll see 11,566 is, and that is most likely to be the target for today. The high so far overnight has been 11,701. So look for an R1 S2 range for the NASDAQ for today. As in the S&P, as we go to the weekly NASDAQ futures, the key level is 11,456. A break below that level would suggest also we would go toward that 21-week moving average. That's 10,907. That would be a substantial move down. Maybe with the negativity that we're seeing in some of the FANGs right now, this might be the element that drives the market over the hump here. And I mentioned in last night's video that we're starting to see some elements here that are telling us that the NASDAQ is trying to roll over, at least go down and retest the September lows. Most likely what we're going to see is that 21-week moving average be a substantial number that's actually rising at almost 1% per week. So that will be moving up toward the 11,000 level. So there's probably about a 400 to 600 point downside on the NASDAQ from this level. Also notice that the ppms are all rolling over. Everything's starting to roll here, which is just setting up that large corrective pattern I've been talking about in that range from the all-time high at the 12,452 down to the September lows at 10,656. That's going to be the broad trading range that I've been discussing. That it's a giant range. This, like in the S&P, is going to be one of the key tests to watch for. Next market I'll cover is the Russell 2000. I haven't been covering this lately, but I do want to just look at this thing from a technical standpoint. We are seeing a rollover just like in the S&P and the NASDAQ, but there's more substantial support, especially down around the 21 and 40-day moving averages are quite a bit lower relative to how the S&P and the NASDAQ is positioned. So this is likely to help that rotation that I've been talking about for a while. But the PPMs, as you can see below, PPM 1 has cut through its first and second derivative. PPM 2 is rolling over, and then we're also seeing PPM 3 basically flat, which tells us that we're definitely going to move toward these lower levels at 1572 to 1576. The only thing that would negate this downward movement would be a close over the 10-day moving average, and that also applies to the NASDAQ and the S&P. That will be your key pivot point across the board on the market indices. Next market I'll cover will be the US dollar. The dollar sold off sharply yesterday as in conjunction with the sell-off in the treasuries. And as I discussed in the live stream yesterday, is these two markets are interlinked, and I believe that the selling in the treasuries is related to the dollar as well. Foreign investors are selling treasury bonds, raising capital, and therefore selling dollars along with them. And that was substantial. Now, I mentioned about the 10-year, I mentioned we could get up to about the 0.83 level, and that may have satisfied that move. Now, overnight in the dollar, we're seeing a little bit of upside. 92.79 is the last trade. So far overnight, we've seen a low of 92.67. We're still above the S1 number, which is 92.53, and then we did see a print at 81, which is R1. So far we have printed an R1 high, and it's likely we'll see an S1. So S1, R1 today, and if we hold S1, we could see a bit of a surge back toward R2 at 92.96 on the dollar. Final market I'll cover tonight is gold. Gold had a really great day yesterday. It was able to close back above the 40-day moving average. With the slight strength in the dollar overnight, we're seeing some selling in gold, but the PPM2 is still accelerating as we trade back into the support levels. As we look at the market grid, the high today has been 1929. S3 is 1912, and we've traded at S3. So we're likely to see some stability at these prices right now. We're off the lows by about $4 on gold. It should hold down here and should stay above the 21-day moving average now at 1905. But as we go to the weekly chart, as I mentioned in yesterday's video, we still have to get a close over 1929 to signal this breakout, and it looks like there's going to be more work to be done here before we can get a breakout in gold. As I mentioned in yesterday's video, we are seeing the PPMs trying to turn up. They have not total signaled a breakout just yet, but we're getting very close to this. Our daily models are long on gold, holding in this pattern, and the 1905 is going to be a critical level, and on the upside it's going to be 1930 will be the key on the upside to break out. This will complete tonight's video. Thank you for watching. We'll talk to you tomorrow night.